never seen myself as just one thing, and I made sure no one else could either. By staying true to myself, making my own path, rising above expectations, and opening the door for others to be their true selves. The first spirit, made with VSOP Cognac, finished in bourbon casks, Martell Blue Swift, soar beyond the expected.
Good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am 𝐿𝐉𝐻𝐈𝐍, and this is the Crypto and Cognac podcast. As always, fueled by my friends at Massy Connoisseur and Martell Cognac. This evening, I'm having myself some VS. I got started a little early, already poured it. Very, very excited about the conversation that we're going to have today. We are going to be talking securities, right? And this is a very technical subject, right? So in addition to my regular notice that I give that nothing that I share should be misconstrued as financial advice, I'm also going to add that I am not a securities lawyer. I'm not a lawyer of any kind, right? So this is not legal advice. This is just information that I have obtained based on hours of research. But yeah, don't go and tell nobody 𝐿𝐉𝐻𝐈𝐍 say that this is not a security and that is not a security, right? Or else you're gonna need some security when I come looking for you, right? So guys, welcome as always. Yeah, this one has been kind of mulling around in my mind for a while, and a lot of things have happened recently in the space as it relates to the SEC becoming a lot more active with its I guess crackdown on the crypto market, and a lot of people have been speculating about what comes next. What is going to be the next big thing that is going to cause us to have issues with the SEC. So I really wanted to touch on that this evening, and maybe provide some context as I understand it. We know we've had the ongoing case between the SEC and XRP in terms of whether XRP is a security, and a lot of people have been waiting with bated breath to figure out if what would be the result of that case, because everybody believes that is going to have tremendous impact on how the space is contemplated. And we're going to talk a little bit about that. We're going to talk about a few other things that have been, in the public domain as it relates to how securities are considered, how crypto assets are considered in terms of securities relating to, for example, the Securities Act of 1933 and the Securities Act of 1934, which created the SEC, as well as giving some clarification around the 𝐂𝐻𝐈𝐍 test, which is something we hear about a lot. Everybody's talking about the 𝐂𝐻𝐈𝐍 test. It doesn't meet the requirements of the 𝐂𝐻𝐈𝐍 test. That's something everybody likes to jump at, but most people don't even understand what the 𝐂𝐻𝐈𝐍 test is. I actually think that the SEC themselves may not quite understand what the 𝐂𝐻𝐈𝐍 test actually, how it works and how it should be adjudged, right? But what I want to do first is, I really want to touch on what are securities, right? And for the purposes of this discussion, because we're talking the SEC, because we're talking about security regulators, I'm going to take the actual definition from the Securities Act, right? It's long, bear with me. So the Securities Act of 1933 says that the term security means any note, stock, treasury stock, security future, security-based swap, bond, debenture, evidence of indebtedness, certificate of interest or participation in any profit-sharing agreement, collateral trust certificate, pre-organization certificate or subscription, transferable share, investment contract, voting trust certificate, certificate of deposit for a security, fractional undivided interest in oil, gas, or other mineral rights, any put, call, straddle, option, or privilege on any security, certificates of deposit, or group of index of securities, including any interest therein or based on the value thereof, or any put, call, straddle, option, or privilege entered into on a national securities exchange relating to foreign currency, or in general any interest or instrument commonly known as a security, or any certificate of interest or participation in temporary or interim certificate for receipt, for guarantee of, or warrant or right to subscribe to or purchase any of the foregoing. Let me take a drink. So basically, I think what he was trying to say is anything can be a security, right? Anything you think of it is a security, right? But in all the investigations that I've done, one person kind of made a good point that the real test of what a security is as it relates to the SEC, the only thing that basically excludes anything from being a security is whether or not the SEC wants to treat with it, right? Whether or not the SEC wants to engage in the regulation or the management of an item that falls under any of these categorizations, right? So that's one definition, and we'll talk a little bit later on about crypto specifically and how the SEC determines whether or not a crypto asset is a security, because they kind of even deviated a little bit away from this very long and lengthy and in-depth definition, all-encompassing definition, and chose to be a little bit more, I guess, open, but also very vague, I guess, also so that they could go back if necessary to the original rule and consider anything under the sun as a cryptocurrency. But before we get into that, I wanted to talk a little bit about why security laws exist in the first place, right? And talk a little bit about, because we kind of feel like the SEC created this idea of what a security is, right? Which would mean that securities only came into being in 1934. But in fact, securities existed long before the formation of the Securities and Exchange Commission. For example, in the 1300s, Venetian moneylenders began to sell debt issues to other lenders and to individual investors. That was a security. In the 1500s, Belgium's exchanges dealt exclusively in promissory notes and bonds. Those were examples of securities. And in the 1600s, with the emergence of various East Indian companies that issued stocks, led to a financial boom in the world. And those were also examples of securities. So why did we need securities laws? And not even just securities laws, but in terms of security laws in the way that the 1933 Act brought things into being, where securities were now being regulated at the federal level in the US. Because prior to that, the prior to the SEC, securities were basically governed by something that was called blue sky laws, right? And basically these laws were enacted and enforced at the state level and regulated to the offering and sale of securities to protect the public from fraud. But what happened is that in October 1929, there was a major stock market crash, and which led ultimately to the Great Depression, and public confidence in the US and US markets kind of was shattered, right? So Congress held hearings and identified certain problems, and in a search to find a solution to those problems, they decided to institute or create or pass the Securities Act of 1933, and then the Securities Act of 1934 created what we now know as the Securities and Exchange Commission. Now, the purpose of the laws was put into basically two common categories, right? So companies offering securities for sale to the public must tell the truth about the business, the securities that they're selling, and the risks involved with investing in those securities. Sounds fair, right? And then those people who sell or trade securities, for example, brokers, dealers, exchanges, must treat with investors fairly and honestly. Now, everybody could get on board with that because, you know, some of those things would apply to what we want to see in the crypto market. Now, if that had happened with the FTX situation, we would be, you know, in a much better state, right? Now, the SEC was basically created with three main missions. One, to protect investors. Two, to maintain fair, orderly, and efficient markets. And three, to facilitate capital formation. Now, why are those three areas important? Why we need to talk about those? Why do we need to talk about those things? Because within recent time, and I would say within the last couple of decades, the SEC has presented itself or been interpreted for the most part as being police, right? And you know, that's kind of interesting because even the police have kind of moved away from how their initial mandate, you know, to protect and serve, right? And now they are seen more as this aggressor. And I think that's how the SEC is seen right now, as this aggressor to the markets that basically prevent innovation in markets. They prevent, especially in, you know, new markets like the cryptocurrency market. They're not seen because what we've seen, especially in the last year, if we look just to the last year, with what happened with the Luna collapse, what happened with Celsius, what happened with 3.0, oh shit, not 3.0. 3.0 is rum. Wow. Okay, I'll brain fart there. Anyway, it will come to me. What happened with FTX? Specifically, the SEC would have failed in their very first mandate, which is to protect investors, right? And I think that is probably one of the reasons, because they've taken some stick for that, why they've come out so aggressively. They also have seemingly failed in their ability to maintain fair, orderly, and efficient markets, right? So they failed at the first two, so they've come out swinging. But in so doing, what they are doing is compromising the third prong, which is the formation of capital markets, because that's basically what securities offer the opportunity for, right? And even when we start looking into the crypto market, and if we look back to the Ethereum crowdfunding, which was used to raise funds for basically building the Ethereum network, that's what it's all about. It's about creating, or it's about the formation of capital towards the execution of particular goals. So how can the SEC do the first two things without compromising the third thing? And I think that's where I think a lot of people feel there is a heavy disconnect between what the SEC's intention is, what the SEC's mandate is, where the SEC is directing its strength and energies right now, and ultimately how they are treating with the crypto market. I know we talk about crypto from a global perspective, but what I've seen in my research basically is that most territories, most regional regulators have not really taken a stance. And a lot of them are waiting to see what the SEC does. So I think that's why I'm going to direct most of my conversation around the SEC and what they're doing, because I think it's going to inform what everybody else does, particularly in the Caribbean context, right? Because we have a few security regulators here, but I've looked. If I've missed it, please, and you know that it exists, please hit me up, forward it to me. But I checked the Eastern Caribbean Securities Regulatory Commission. I checked the Financial Service Commissions of Barbados and Jamaica. I checked the Trinidad and Tobago Security and Exchange Commission and the Guyana Securities Council. And, none of them have put out anything significant as it relates to their position on cryptocurrency, crypto assets. Actually, I found something very interesting, right? No, let's go forward a little from this. I found something really interesting that, this was created in 2019, right? A Caribbean fintech pledge. And it basically said, it basically was an instrument where all these regional bodies came together and pledged that they're gonna ensure that Caribbean investors are educated around cryptocurrency, knowledgeable, and since 2019, the pledge count is 20 out of a target of 5,000. Now, I was like, okay, something must be broken here. This can't be real, right? So I was like, okay, let me take the pledge, right? Let me take the pledge and see if it will impact the number, right? And I did. And the number went up by 1, right? So this is actual numbers. This is the extent of what our regional bodies have done as it relates to crypto assets, cryptocurrencies, creating a Caribbean fintech pledge that has so far been taken by 20 people. For me, it's crazy. And this is why, I get so irked when politicians stand in the respective parliaments of the Caribbean and talk utter doo-doo from a very, very uninformed position, from a position of not taking any real action, a position of lip service and virtue signaling, to comment on what is happening in this space. But anyway, I digress. So all that to say that this is why today I've decided that what I'm gonna do is I'm gonna look at this particular issue about whether cryptocurrencies and crypto assets are securities from the standpoint of what the SEC says about it. Now, like I said, the act came into being in 1933. The SEC was created in 1934, and then one of the major pillars as it relates to testing whether something is or is not a security, despite that long essay of a description, came in 1946 in a case, 𝐂𝐻𝐈𝐍 versus the SEC, right? Now, for context, 1946, this was 12 years after the establishment of the SEC as an agency, 77 years ago from today. And just for some further context on this test, which is largely used to determine whether something is a security in 2023, is that the 𝐻𝐻𝐈𝐍 test, 𝐻𝐻𝐈𝐍 versus the SEC case was in 1946, right? The Civil Rights Act was in 1964, right? That's where they brought a law into being that people couldn't be discriminated against based on race, right? The Voting Act came in 1965, which said that people couldn't be discriminated against and have their voting rights taken away based on their race. The internet came into being in 1984, right? That's 39 years ago. Bitcoin, which invented this cryptocurrency, the modern crypto environment, the modern crypto industry that we are now a part of and talking about, came into being in 2009. And like I said, the Ethereum crowdfunding took place in 2014, and Ethereum went live in 2015. Why are we talking about Ethereum and when the crowdfunding? Because that is largely considered the birth of the ICO phase of this crypto space, right? And I think that's what really drew the attention of the SEC to the crypto space. All that to say that we are using a test, right, that was created 77 years ago, before the internet was even a thought, to manage and regulate instruments that, if we were to go back to 1946 and show them a cell phone, they would think we were aliens, right? But this is what we are using today, right? This is the main tool that the SEC is using to determine whether a crypto asset is a security or not. Aside from that, before I go on to the other things that they talked about, just to give some clarity about the 𝐻𝐻𝐈𝐍 test as it's known. So the 𝐻𝐻𝐈𝐍 test has basically 4 prongs, right? So for something to be considered a security, it must satisfy all 4 prongs, right? So 1, there is an investment of money, right? The investment is made in a common enterprise. The investors expect to make a profit from their investment, and any expected profits or returns are due to the actions of a third party or promoter, right? Now, under the rule, it does not matter if a security offering is formally done by a written contract or a stock certificate or anything like that. Once the transaction satisfies those 4 prongs, then that particular item is considered a security. And this rule has been used to make things in the past securities, things like whiskey, things like beavers, things like chinchillas, right? So imagine the fur coat, something that you're rocking, considered a security, right? That's how laughable this one particular test is in terms of the fact that it is used to determine in 2023 what a security is. No, in 2014, 2015, after the Ether ICO, the SEC staff provided the crypto industry with an analytical framework which was meant to clarify whether or not a crypto asset is a security. And then in 2018, a speech by the SEC Corporation Finance Division Director, Mr. William Hinman, it described this particular framework in more details, right? And then they sent out a further detailed staff guidance in 2019. And basically, the core idea was whether a blockchain project is sufficiently decentralized, the crypto asset associated would not be considered to be an investment contract under the so-called Howey test. Now, for me, it seemed like the SEC was trying to shortcut the process of regulating cryptocurrencies and basically set this particular checkpoint in place to basically exclude the two biggest cryptocurrencies, Bitcoin and Ethereum, and then anything else would at the point in time fall into the categorization of a security because they would not be sufficiently decentralized. And the fact of the matter is that most cryptocurrencies, their creation, their formation is done by a small team. And so what point in the life cycle of a cryptocurrency are they using to adjudge whether or not it's sufficiently decentralized? Now, even Bitcoin, if you go back to the early days where only one or two people were mining Bitcoin, then was Bitcoin at that time sufficiently decentralized? Now, I think Bitcoin would not satisfy the Howey test in terms of the investment of money, because there's not a strict investment of money, because you're mining it using, at that point in time, your computing power of your regular computer, right? Since then, you've had to invest, you would have had to invest significant capital into mining rigs and that kind of thing, right? And then Bitcoin, I don't even think at that point in time, there was an expectation of profit necessarily amongst the early investors. I think people believed in a philosophy that was Bitcoin, and wanted to see a truly decentralized currency and format for transacting and trading across the world. So I think in those early days, people were more concerned with spreading the word than making money. So I think, again, Bitcoin doesn't necessarily satisfy that. And then, in terms of the expected profits being as a result of the actions of a third party, nobody really owns Bitcoin. Nobody, even the founder of Bitcoin has disappeared into the night, Mr. Satoshi. So, okay, Bitcoin doesn't satisfy any of the prongs. But in terms of Ethereum and their ICO, their initial coin offering, you could say investment of money, yes. Common enterprise, yes. Investors, did the investors expect profits, or were they just investing to see this thing built? That could be up for debate. And returns due to the actions of a third party or promoter, yes. I mean, the team, we all know. Well, I think Vitalik is one of the most popular, but Charles who's also the founder of Cardano, was one of the guys out there. I think it was an initial team of about 5 people, and then other people came on board after the fact. So Ethereum, maybe not. But since Ethereum has moved from proof of work to proof of stake, and now there are groups of people who hold large stakes, maybe it starts looking less decentralized, and maybe it no longer satisfies the crown of sufficiently decentralized. I don't know. A lot more questions, and I really would like to have someone who is a little bit more versed in securities law. I am supposed to have someone on next week who is a lawyer. I don't think she specializes in securities, and we're going to talk more specifically about NFTs. But I would love, if you guys know of a security lawyer that might be willing to come on the podcast and answer some of these questions for us, I would love to have them on. Guys, I've been rambling. Tell me, questions. Let me get a drink. All right, so no way on questions. But I think in recent times, as I was saying, that it feels like the SEC has taken an adversarial approach in its treatment of crypto assets as it relates to whether or not they are securities or not. And I think the clearest example of that is that even NFTs now are being considered and speculated about being considered securities, right? And I read a very, very cool article recently where the guy, his name is Brian Fryer. Let me just try to find that. Sorry about that. But basically, he was saying that NFTs are securities, and we should be happy that they are securities because it is the security property of an NFT that gives it value. And basically, his argument is that all art. So he's a securities lawyer, I believe. I know he's a lawyer. I think he's a securities lawyer, but he also was an artist. I think he went to art school before going into law. So, he has a very, very unique perspective on the particular thing. Let me see. Right. So basically, he starts his article by saying, everyone in the non-fungible token market is terrified that the US Securities and Exchange Commission will decide that NFTs are securities and regulate them. They should get over it. Of course, NFTs are securities. That's what makes them so powerful and promising. Rather than avoid SEC regulations, the NFT industry should embrace this categorization. It's inevitable and desirable, especially because once the SEC understands how the NFT market works, it is likely to regulate with a light touch. Now, he goes on to say that the art market has always been a securities market. We just couldn't see it because objects got in the way. So basically what he's saying is that in terms of how we treat with art, right? What we've always bought as it relates to art, so a Picasso painting or a Van Gogh painting, is not just the physical item that you hang on your wall. Because if that was the case, they would be a lot less expensive. Prints would be just as valuable as original works because all you want to do is look at it, right? The reason that we are investing in these items is because we believe in the appreciation of the brand behind a particular work. So if a Van Gogh painting was painted by Illuminati is not an artist, it have no brand behind that, it would be worth probably less than the canvas that it was painted on. But it's the branding behind it, the Van Gogh branding, and the expectation of increased returns or capital gains as it relates to the value of that work of art that gives it value. And what he's basically saying is that now that with the digital space, with NFTs being digitally native, the removal of that physical item has allowed us to see clearly that this thing is a security. But his belief is that NFTs necessarily don't fall under the categorization of what he calls the fifth prong of the Howey test, what the SEC wants to treat with. Now, his critics have said, because he made comparisons about, Pokemon cards, which are securities as well, and they do regulate those and, anything falling into that categorization. And his critics said, well, Pokemon cards don't have $1 trillion market capitalization, right? The SEC is interested in NFTs, crypto, because of the volume, because of the size of the market. But he seems to make a strong case, and I'll put a link to his article in the description below after, so you guys could check it out for yourself. But yeah, he's one person who believes, and he basically says that he is regulatory agnostic, right? He's not pro regulations, he's not anti regulations. He could care less as long as it's done properly. And I think the first time I heard it, I was like, oh, maybe I'm regulatory agnostic as well. Maybe that's a term that I should adopt. But yeah, because I really am not here or there. I'm not anti-regulations, and I'm definitely not pro-regulations. I think it might be a necessary evil, or a necessary tool. Let me not categorize it as evil, especially in the early days of this space where a lot of people are susceptible because of this desire for riches. I think it might be important in terms of facilitating the type of adoption that we really want to see in this space. But yeah, I mean, that was a very, very interesting take from him. I wish you guys would engage and let me hear your thoughts on whether or not you all think that, based on the Howey test, based on the decentralization matrix, based on what Mr. Brian Fryer is saying, whether or not in your mind crypto assets are in fact securities. Now, based on where you reside, based on your jurisdiction, you will have to play by the laws of your jurisdiction, right? And specifically, if you're in the US, the SEC has a major say in what you do. So I guess that's why some of these crypto companies have chosen locations like Bahamas and Singapore and these Cayman Islands to register, because they are trying to avoid not necessarily the laws, because they aren't very strict laws, but just the regulatory oversight of the SEC. As of right now, I don't know that any Caribbean territory has laws in place, regulations in place that treat with cryptocurrencies, crypto assets as securities. So for our environment, and I'm open to being corrected, this is not legal advice, this is not financial advice, but yeah, I mean, I think for the Caribbean context, it's not a security. If you're a Caribbean resident with a US passport, please follow US laws. If you are a Caribbean citizen who resides in the US, please follow US laws or the laws of any territory you live in, whether it's the UK, whether it's other parts of Europe, whether you live in Asia. Follow and seek out, do your own research, understand the laws of the territory in which you live, operate, or hold citizenship for. Please, not run out and tell them what Illuminati said. They say, what? Who there? Right? So, let me see. I now seen one comment here. Mr. Illumi Star. What's your opinion about some bad whales? Those are trying to best to dump the crypto market as BlackRock has done. Whales gonna do whales things, you know. We still in the wild west. It's why the SEC wants to come in and regulate us. I think any bad actor hurts the market, and they may make some money in the initial stages, but at the end of the day, I think if they continue, they're gonna kill the goose that laid the golden egg, and that's not what we want. So, you know, get them out. I mean, as well as we got the SBFs out, let's get them out. And that's why I do, yes, it's painful. God knows I took a huge hit when Luna crashed. I took a hit when FTX crashed. But ultimately, if you intend to be around for a while, you want to see these guys out of this space as early as possible, you know. So let's get them out now while we at 1 trillion, as compared to, you know, having that kind of fallout at 10 trillion, because that just means 10 times the amount of people going to be hurt, or the fallout going to be 10 times as worse. So yeah, that's my perspective on that. But maybe we could have a conversation on, you know, whales and how they operate. We have some whales in Omega. Big up George, big up man like Kenran, big up the original Walking Shaw. Maybe we have those guys on, and Mr. Nadeem, and they could give their perspective about, you know, how whales do their things, whether, you know, whales can operate ethically or not. But yeah, I mean, that's what we're here for. It's all about information, conversation, and education. So guys, I hope I answered 1 or 2 questions that you had. I hope I was able to give you some information to take away. I hope I raised some questions in your mind that you could go away with and do your own research. Again, I'm gonna put some links in the description below that you guys could go and check out after the fact to get more information, get more clarity on this whole idea. Let's see where it's going. Thank you guys for being with me again another Thursday. I truly believe that crypto adoption is inevitable. I look forward to seeing you guys. You know, maybe you all will all have Lambos and fly past me. Maybe you stop and give me a drop, right? Guys, thank you so much for being with me. As always, stay blessed. Illuminati out. Love.